Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook, and I will be your host for about the next 20 minutes here on Options Guide TV. It is earnings season, and I've decided, I guess, that I kind of want to build my own hedge fund centered around the financial stocks. And in particular, I do like the deal maker stocks. We looked at a trade in JP Morgan not that long ago. Goldman Sachs is the next up on the list. They're going to be announcing Wednesday morning before the open. We also did a trade on Citigroup, and Citigroup is also going to be announcing on Tuesday before the open. So on Citigroup, let's start by just a quick review of it. We did this trade. We set this trade up on Friday, and we're doing just a simple bull call spread. In general, we're going to be bullish in the financials. So we're looking to buy the 85 strike call and at the same time sell the 92 strike call. We did this for a net debit to the account of $2.67 based off of my note from Friday. We're now seeing that market at $2.77. So it's just up about a dime or so on that trade. We're going to ride it through earnings based off of the expected move. We're looking at about $5. Stock's trading at 85, 243 on the ask, on the call, 249. So a little less, especially if you go off a midpoint, about $4.75. But that puts us right at very close to our strike that we are selling. And if we look at that strike and we take a peek over at the delta, we see that that's trading at $22 or 22 delta, which at this point in time is just outside of the one standard deviation move. One standard deviation move is about 93.5. So this is within the expected move. And once again, what is the expected move? That is what the marketplace thinks can happen before that expiration. Now, if you want to look at earnings and what the anticipation is for just the earnings report, you look at the most near-term earnings report. The most near-term earnings is the July 18th expiration. And that expiration, let's just toss this one in here real quick. Like, we're going to buy that ask and we'll buy this one. And got to get rid of the other ones. Buy, and boom, $3.57 for the short term. And that puts us, so the 20 delta, I guess 19, the closest to the 20 delta would be about $91. So across the board, we're setting up this trade. We're bullish. We have limited and known downside risk. We are selling something that is about the expected move away. We're going out to the August expiration, which is 18 days away. In other words, we're not just bullish on the financials and on Citibank for that earnings report. We're going to be a little bit more longer term bullish, and longer I use it with air quotes, mainly because if we were just doing an earnings play, we would use the July 18th expiration. But we're going to go out 18 days. We're going to give a chance for this to run. And I've mentioned this on Friday's show a lot, is what we've seen happen in the financials, in particular in JP Morgan and in Goldman Sachs, which we're going to do a trade on here shortly. We've had a fairly decent run up, very strong move, actually since the beginning of the year in the financials. Still decent valuations, and we're seeing the price to book values. You can make an argument Citibank is actually the lowest on the price to book, and book basically meaning the assets of the bank. It's a little bit, most people look at price to book more so than PE when it comes to banks, but PE, forward PE, and that is also important. But Citibank, I actually wrote it down here. It's the price to book, depending on what service you're looking at, is about 0.83, for example. Bank of America, which is going to be announcing on Wednesday too before the open, is 1.28. So you're looking at, these are the assets, these are the value of the assets, and they're undervaluing Citibank assets relative to Bank of America. Now, Citibank has had a very strong move, up about 25% since the beginning of the year. So I still like the financials. I like the fact that what's going on with the yield curve. It's finally came back in line a little bit. The 10 to the 2 is a solid ratio, with the 10 being lower than, or with the 10 being lower than 10 to the 2. Well, I guess I was thinking 10 to the 30, but 2 to the 10, trading at lower yields, better yield curve for the banks. Just across the board, one of the biggest things that we haven't really seen hit is everybody keeps talking about deregulation, the fact that the markets are moving, that people are trying to make deals. And that's a positive for the deal making stocks. And I think of Jefferies, I think of Goldman Sachs, I think of JPM, I think of BlackRock. All of those stocks have had solid moves to the upside, but they're still trading at decent valuations to the marketplace. Goldman Sachs, which once again we're going to look at, is trading at a price to book of around 2 times. But that's at the high for Goldman Sachs, but it's still fairly reasonable valuation. If you look at forward PE on Goldman Sachs, it's trading right around 15 times forward PE. Around 15 times as far as that number is concerned. So like we're seeing there's still room for growth in these financial stocks, because they just didn't get the respect they deserve for many years. And a lot of it is perceived to be the stranglehold that was on the banks with all the regulations. Let's just leave it there. Okay. Citibank, this is the trade that we put together. Interesting in that. Now, I wouldn't, I'll toss out a bank trade, Bank of America. We also have Morgan Stanley announcing, which is a deal maker, PNC, and in the insurance world, the stock that had done very well is PGR, Progressive Insurance. They're going to be announcing also on Wednesday morning, and that stock has had a very solid run up. Now, insurance companies trade at a little bit more price to book than most banks will. PNC is also going to be announcing. Yeah, so it's earnings season. It's started. We're rocking and rolling. Let's look at the chart in Goldman. Let's do that. Just looking at my notes to see what. So here's Bank. Oh, that's where I was. Bank of America. So this is exactly what I'm talking about. And then I'm going to pull up JP Morgan, and I'm going to pull up Goldman Sachs. But let's go back. Let's put some days in here. Let's go about 2,000 days. And you see breaking through this high, the most recent high in Bank of America, running up a little bit. And then as we get into here, we see the pullback, right in here. And we come back below these levels. So running up, trying to get to the, I don't know, when was this? 2008 high, long period of consolidation, strong move to the upside. And now we're back, still battling. And every time that we break through this level to the upside, the odds of it holding, in my mind, especially with the just throwing in the economic conditions and everything else that we just talked about, it's if we can get that catalyst that will break us through to this upside, I do think that level is pushing up towards the 50 level. Now let's go back. I didn't want to zoom that much. And let's go back and let's look at how JP Morgan is too. Same scenario, right? Broke through the new high, parabolic move, even on the 20-day, 50-day, everything's in line, up to a new high and a pullback going into earnings. Same scenario. We did break through this most recent high in JP Morgan, but once again, it's more of a deal making stock. And with that said, we're trading right here at 287.95. But interesting, the pullback, you could see obviously if we can get the catalyst, it's not going to be hard as far as the chart is concerned to get back to this level, which is kind of hiding me, 295. We'll just say 295 level from there. And then let's go look at Goldman Sachs, and we're going to see something very similar once again. The strong parabolic move to the upside, pullback, and now we're in this range. So 225, if we get a little bit of a catalyst, 15-point move to the upside. And Goldman has been strong recently. Volatile, but strong. Volatile for Goldman, I would say, but strong. And here it's actually showing the price of book on this at 119. I got different information saying it was right around $2. JPM is going to be price to book 168 at this, and that I think is about 2.25 from my source. All right, so let's go back and let's set up our trade in Goldman. So we'll use that same August 18th expiration that we've been using for the banks, going out 18 days. Stock is trading at 710. We're going to use the same type of formula. We're going to go a little bit in the money. We're going to be bullish to the upside. We're going to buy the 707. Let's go 705. We're up $5 today. It kind of screws me up a little bit. It's only a 1% rounding up, but earlier today I had the trade set up down at 705. Let's look at how much extrinsic value do we got? $17 here. All right, we'll buy it. Let's buy the 705. And then we're going to look to sell once again something right around that 20 delta. Since we went a little bit deeper into money, I'm going to go up to the 750 level, and we're going to sell the 605. All right. So 45 points of upside. Go back to the chart. We're saying on Goldman. Let's zoom in. So 226 is the most recent high that we see in it. We're giving ourselves a lot of room to run. Let's do the 740. What's the expected move? Let's bring in a little bit more premium. 740's 30 delta with that range. Let's see. All right, we're gonna make it to 740. So the official paper trade, let's send this to the what if calculator. If we can break out to the upside, who knows where the next stop is as far as Goldman Sachs is concerned. Like I said, the price to book is higher than it's ever been. So if you look at it on that type of valuation, it's trading right around $2, and not that long ago it was trading down around $1. But you see the chart, parabolic move to the upside. Still think that there's more room to run, especially if we break out and set a new recent high based off of what we saw in the marketplace, and we want to give it a little bit of room to run to the upside. They got the potential of just talking about deregulation in the earnings report afterwards in the conference call could propel the stock to higher levels. As far as just general valuation, PE, price to book, there's nothing that really scares you. The scariest thing is the parabolic move to the upside, but it's kind of nice that we had a little bit of a pullback, not a huge pullback, but a little bit of a pullback from the recent highs. That's my theme. All right. If we have any questions, please do put them in the chat box. I don't know what you can watch Options Guide TV across many different platforms. Obviously, you got the Tradier Hub, you got the Tradier YouTube channel. You can watch it on the Tradier X. You can watch it on my x.com, and under my profile at Brian Overby. It's all available. But there are chat box available if you do have any questions on my little hedge fund that we're going to do around earnings. Feel free to ask. All right, so let's look at Goldman. We're going to trade this. Got this in. The chart, 740. Oh, and then we want to look at the expected move in the short term. Here's the 4-day expected move. See if we get somewhere close to 440 or to 740. buy and buy. 30 points. Yeah, that's right at it. Okay, so rounding up, that would be 30 points. We'll call it 28. 710 plus 28 is 738, and we're selling the 740 strike. So the expected move in the short term gets us there. We're a little bit, we got more time for it to run. So the expected move by the August 18th date is definitely within that range. We're going to give it 18 days to run. Yeah, I kind of like this trade. Oh, well, I don't kind of like it. I do like it. And the next trade that I want to look at, if you want to do a bank trade. Now, I don't. We're my three stocks. I like the fact that Citigroup is still just running and trades at a decent price to book. And then you have the fact that it's pulled back a little bit. We're going into the earnings. I like the way Citi is looking. I also like the way JP Morgan is looking, and then Goldman Sachs. But we've already looked at a JP Morgan trade. And now if you want to throw one more trade in here, I'd look at bank. I don't mind bank. But I would adjust my strikes on bank. I want to do a 50-50 trade here. And let's do something in the shorter term. Let's go down to the June 11th expiration. And I'll take a screenshot of this and we'll follow up on the trade because we're going to have a lot to talk about on Wednesday. But let's go 46. Let's go equidistant in and out of the money. So our goal here would be to buy as much extrinsic value as we're selling. And I can see this right now that this is probably where I want to be. So 45, that's $1.50. This should be a 50-50 bet. I'm going to bet $1 to make $1. Okay. And then this one here. So 3 points wide, it's at 47. Might even be a little bit better. 167. So let's see what happens if we go 4 points wide. Let's get rid of this leg. And if it goes 4 points wide, I'd like to pay around $2. It's going to be a little less than that, though. Make this a sell. Yeah, 194. I like that. We're right at that 47 level, $1.94. So literally, now here's how, without doing the math, you kind of know the prices. And this is a little bit of just a pricing, I don't know, lesson. We're going to go out 11 days. Bank, I'm just not I'm a little bit more bullish, like I said, once again, in Goldman Sachs, JP Morgan, those type of companies that got some investment banking possibilities. Bank is more of a consumer place, a little bit like Citigroup. And then if you buy the 45, you sell the 49, stocks at 47. If you're equidistant in or out of the money, you're normally going to have a 50-50 shot. You're going to be buying as much time premium as you are selling. And when that happens, you take the time component out of the option prices. Not 100%, but you make it so that time is not as big of a factor because I'm buying as much time premium as I'm selling. As a matter of fact here, I'm buying a little bit less time premium than I'm selling. I'm buying 52 cents worth of extrinsic or time value by buying this option contract. And by selling this one, I'm selling 30. Oh, actually, because we moved it up, I'm selling 34 cents. And so because of this, because these numbers are very close to equal, I thought we were going to do this one, 48. But because these are close to equal, when you have that scenario, normally you're going to pay 2 to make 4 or pay 1 to make 2. In other words, it's usually a 50-50 place on the risk reward scenario. And we're very close here, 194. And considering that we're just a little bit out of the money, we're going to pay a little bit less than a 2-to-1. If we moved up a little bit more, this number would become, these numbers would become more in line. But we're just a little bit out of the money on the underlying stock price. We're just below 77.22 cents. So this makes sense. But I don't mind this trade either. This would be more of a short-term play, more of, let's hope the momentum of the financials can pull, rise the tides for all the companies across the board. And I'm just looking that if we do a few of these, one or two of them should be able to break out to the upside and have some good upside potential. And we gave them some room to run. All right. Interesting time in the financials. Financials have done well. One of the better sectors, one of the more ignored sectors over the last 3 or 4 years. And I think it's their time to blossom. So I don't mind getting long financials in general in your account, let alone looking at doing these type of stocks for their earnings report. Now, I'll mention one other stock too, but I don't like the options markets in it, and that is BlackRock. So if we look at BlackRock, BLK, you just have a stock. Once again, a lot of assets, looks to make deals. This company does, and they've had a decent run up. Also, they got beat up. It was a buying opportunity at the beginning of the year, heading into quote unquote Liberation Day. Interesting stock to just buy outright, but the markets are tough in the options world. They're going to be announcing on Tuesday. They're also announcing on Tuesday. 24 by 21, you're 3 points wide. That's the only reason why I don't necessarily like BlackRock as an options trade, but it's an interesting, you want to buy a few shares of this underlying stock. I also think that this is an interesting underlying that you could trade. If you wanted to look at something, I would probably go way out of the money and sell a put spread. 1,060, just about one standard deviation. Yeah, 11 days away. I don't mind that. Selling the 550, and let's go 10 points wide and see if we can get it done for $1. Buying that. We are at, all right, we froze. 550, and so 70 cents. Yeah, I'd like to get $1 on it. I'd like to get $1 if I was going to trade that. If we're going to go 10 points wide. All right, that's it. I don't see any questions or comments, and we're going to have a very interesting day on Wednesday. I'm going to have a lot of these trades on personally inside my account. I own underlying stocks. I own JP Morgan outright. I own Charles Schwab outright. I own quite a few financial stocks just in general, and I've had those positions on for quite some time. That's straightforward. Thanks for tuning in. We'll be in on Wednesday for the next edition of Options Guide TV, and we'll see how the kickoff of earnings season does. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.